Good morning, Port St. Lucie. Welcome back to another episode of PSL Daily Download, your first up to all things real estate in Port St. Lucie. Today we have a great show for you. We're going to talk about inventory. We're going to see where the rates are at. We're going to talk about the market, and we're going to end the report with that PCE report that I have been talking about for the last week and a half. And I planned on making a video on Friday, but unfortunately, I was not able to. But before I do, today is April 29th, 2024. Can't believe the month is almost over. On Wednesday, we will be in May, and we're starting to feel it. It's getting hot out there. A little windy, but hot. Um, my name is Jaime, and again, welcome back to the show. Before I do, I normally ask for this at the end of the video. I'm going to ask for it at the beginning. If you enjoy this show, please click the like, please click the subscribe button. It does help the channel grow, and I appreciate you for that. So let's get our day started. We're going to talk about inventory. We're seeing inventory grow across basically all metrics. So as of this morning for inventory, we have it at 2329, right down there. Yep. And as you can see, it's actually been steadily growing. On April 24th, we hit, a small milestone. We hit 2300. I did expect that to kind of come under and then revert to a higher amount, and it did. We are now currently higher, and we are almost at 5% increase in inventory month to date. So we'll see where the month ends, but again, it's been a steady grind upward in inventory. Homes listed under 375. This is where I'm trying to wrap my head around it. I think some of it has to do with some houses that were maybe listed in the high 300s, low 400s, or maybe getting pushed into that 375 or below bucket. And that might be the case, but it's growing so fast. As you can see, we're at 18% increase. We're, overall inventory that's, a little bit below five, but yet this bucket is almost 20% compared to the homes above 375 are just at under 1%. So there's a big difference in this, and I'm not sure why. If you have any ideas, please let me know. Put it in some comments below. But homes under 375, that inventory is skyrocketing. I mean, that's the least I can say is 20% almost. So, and that's only month to date. You don't even want to see what that looks like annualized. All right. Let's go to inventory of homes being that are reduced. We've also had an increase month to date at 7.82%, and we're sitting at 648. Homes that are listed for sale for rent, I apologize, that we are at 395, and this has been it has increased actually 15%. But recently, over the last few weeks or the last couple of weeks, I would say it's kind of steady. But we had a big increase at the beginning of the month, then it's kind of set in the high 300s. But looks like we might push 400. We'll see where we end the month. So inventory is growing. So the buyers now have enough inventory to, at least have a better selection of a home when they're out there shopping. All right, let's look at rates. Now, this is the rate from Mortgage News Daily's daily rate survey. This is not today's rate. This is the rate as of the last the close of the last business day. So this is how their tracker had it as of Friday afternoon. They had the 30-year fixed rate at 7.45, which was a decrease of 0.07% from the beginning of Friday. And again, I only tracked really those two, the 30-year and the fixed rate and the FHA. The 30-year FHA was at 6.95, and that was also down a percentage of 0.05%. As of this morning, I have gotten some updates on rates, and they are tracking a little bit lower, kind of close to par, but they're kind of on the lower side. So we'll see where the market goes. Speaking of which, let's jump in there. All right, so we are on CNBC's US Market Watch here, and they have actually all three indexes. The Dow Jones, Nasdaq, and the S&P are all up slightly. I know that the S&P specifically was, there was a good correction of about 5%, if I'm not mistaken, over the last week and a half. It's since recovered, or starting to recover, and we might see that upswing. So hopefully we do. The U.S. Treasury yield, which is again linked to mortgages, or mortgages follow the 10-year yield a little bit closer than any of the other yields. is at 4.616. That is down 0.053, which again is not surprising why the rates are coming in just a little bit lower, or at least the pricing on those rates. All right. And now we are going to end the video with the a market watch report for the PCE. Now, this is the report that the Fed tracks closely. This excludes volatile, this tracks like the inflation, but it excludes volatile things like oil, energy, and things like that. So I'm going to go over this. It came in high, so a little spoiler, it did come in higher than expected, which we'll talk about here in a minute. So there's a market watch report. This was posted April 26, 2024, 8:52, so shortly after the report came out. So let's go up, and it's titled Prices rises sharply again. PCE shows and signals progress on slowing inflation stalls. Okay, kind of a twist of words there. All right. So I am going to actually make this a little bit bigger. And bear with me here. Should have probably prepared for this here just a little bit better, but that's okay. I'm not a professional. I don't act like one on TV here. All right. Okay. So hopefully you could see that. Good enough. All right. So prices in the US jumped again in March based on the Federal Reserve's preferred PCE index, signaling that the progress on reducing inflation has stalled. The PCE index rose zero point 0.3 last month, the government said Friday. Economists polled by the Wall Street Journal had forecasted at 0.3 gain, 0.3% gain. The more closely followed core rate that strips out food and energy, again, the volatile that I just spoke about, also increased 0.3%. The core index is viewed as a better predictor of future inflation. The inflation reading in February and January, meanwhile, were revised to show slightly better increases than previously reported. But the changes were small enough that the prior estimates for headlines and core PCE were basically unchanged due to rounding. The yearly rate of inflation, meanwhile, climbed to 2.7 from 2.5. The rate of core inflation in the 12 months ended in March was unchanged at 2.8. The latest readings on inflation has sown further doubts about the Fed cutting U.S. interest rates anytime soon. Okay, so sum it all up. Inflation came in higher than expected, at least based on this report. And again, these are all core items, excluding food and energy, that are a lot, there's a lot more volatility there from one month to the next. So they try to exclude that to keep it as stable as possible for this reporting. So now I had also mentioned last week, we went into 2024 expecting, or when I say we, I mean the market expected anywhere between 6-7%, 7 rate cuts of 0.25% each. That has not happened. Number one, we have not gotten any rate cuts. And this report and previous reports till now have put it in doubt that they are going to be any. So we went from expecting 6 to 7. We are now expecting 1 to 2 maybe. And there is a buzz out there that maybe none, or maybe a slight increase, which I personally don't expect, based on other metrics that I personally follow. But anything can happen. Obviously, we never expected inflation to go crazy. Here we are. We never expected for inflation to stall. Here we are. So, kind of like they say, expect the unexpected. Now, in saying that, tomorrow, the FOMC, the Federal Reserve, is having their monthly meeting. So it starts tomorrow and it ends Wednesday afternoon. I believe if I'm not mistaken, at 2 o'clock Wednesday, they'll let everyone know if there's going to be a rate change. And then at 2:30, generally speaking, Chairman Jerome Powell goes to the podium and kind of, goes over the report and answers questions. And that's kind of like the highlight of the month, basically, for inflation and the guidance for the future of, at least for this, quarter, maybe year. we'll see where that goes. But so a lot of, that's big. That's big. This if you're in the mortgage industry, if you're a realtor, if you're someone that's buying, even selling, right? You might not affect you personally, but if you're selling a property, there's gonna be a buyer out there that will be affected, which will enhance affect you and the ability for you to sell your house. Maybe it makes it quicker for you to sell it, and maybe it doesn't. So it affects everyone. Unfortunately, like I've mentioned, there's a lot of debt in this country. So interest rates are a huge component of where this economy goes. So other than that, I hope you found some value in this video. I already asked before, but I'll ask again. Click that like, click the subscribe. I'm going to see you tomorrow. Bye.